quite a few DTAs in place, which make it a good place for actually setting up a holding company and then investing in from Singapore around the region. Of course, there's a myriad of other jurisdictions, Cayman, BVI, Hong Kong, other jurisdictions that you can advise or set up holding structures. So double tax agreements, I guess that's the takeaway. You'll want to have a chat with your legal and tax advisors. What are the advantages or disadvantages? And then within those parameters, of course, you're looking at various ways to get money out. You're looking principally at dividends. Are there certain discounted rates on dividends? But you also have royalties, you have service fees, other ways to get money out of individual investments in many of the markets around. And then I guess lastly, I'll just say there's some interesting companies, private equity funds around that actually specialize in trapped cash, where a company maybe has sold off assets but has cash actually sitting in an account where it, for whatever reason, it is difficult to get the funds out. There's a long tax finalization process underway. So what these funds will do, they'll come in and basically take you out at a discount, and they'll take the time to work through, sometimes it's 6 to 12 months, longer in some cases, to get all the tax finalization and get the proceeds out on that basis. So there's some interesting ways of dealing with trapped cash. Thanks.
For us, well, I mean, we work in markets in like Afghanistan frequently, where you can just take the currency out in suitcases at $1 million shots at a time. So we haven't experienced too many capital control issues. I guess India.
No. Has anybody tried that in Vietnam?
I have not.
Personally, no. Okay, just one.
If you have $1 million to give me, though, I'd be happy to try.
Go ahead.
No, but usually when we're approaching a transaction, we try to identify up front if those kinds of issues are there and put a strict place to address it up front. And because we work with a lot of U.S. government agencies, for example, in India, all of the loans that are going to projects in India need to be approved by the local authority, and it's an extensive process. Then you try and plan for that up front, and work with the authority to assure that funds will be able to be repatriated and the loan is approved in advance, and there won't be any issues there. In a country like Vietnam, we haven't done transactions here, so I can't really speak to that. I guess the takeaway is understand the legal framework, understand where the currency and capital controls are, and then see what tools we can use to get around it.
Vietnam, of course, has problems of taking money out of the country, but there's also a different kind of problem in Vietnam, and it comes from the fact that the main foreign exchange law has really not been fully implemented. So there's a good deal of ambiguity. And many foreigners benefited from this ambiguity for a long time because prices at every level, including transaction prices, were quoted in US dollars. And so value was preserved over a long period of time until the transaction actually took place, although the transaction may have been ultimately in dong at the rate of exchange. The state bank has become very strict now and requires that transaction be quoted in Vietnamese dong, and that in fact everything be quoted, that it's now considered illegal to quote prices in a foreign currency. And several fairly serious fines have been imposed on companies that have done that. So at one level, why shouldn't Vietnam be any different than any other country where the local currency is what is quoted? same time, many people have gotten used to the idea of quoting in foreign currency, particularly because the dong, the Vietnamese dong, continues to devalue, although it's going through a stable period right now. But I think in Vietnam, we're now going to have to get used to the idea of quoting and seeing our transactions completed in local currency.
And on the currency question, getting money out, if you're a foreign lender who's putting money into Vietnam, what's that procedure like? Does anybody want to touch on that one?
Yeah, if you lend the money to Vietnam and the term is below 12 months, and then you can just have an agreement with the borrower and then remit money and get it out with just that contract. But if the term of the loan is 1 year and above, then you have to register that loan with the State Bank of Vietnam, and you can't disperse the money until you get that approval from the State Bank of Vietnam. If you don't have that, later on the bank won't allow you to remit the money back unless you go and do a backward registration with some administrative penalties, and then they may allow you to get the money out. Right? So normally you have to consider whether you have to register that loan with the central bank before you put the money into it.
Just to add something, and also, although it's a short-term loan, it's cumulative. So if you take a short-term loan and continue to extend it, it becomes a long-term loan, and you do have to register it. The other reality, I think, is that it's not, if you follow the steps, it's not legally difficult to remit money. The issue, if there is an issue, maybe a commercial issue, whether there is currency available at your bank at a particular time, but even that is a short-term more than a long-term problem.
Yeah. Chris, have you dealt with getting money in and out of Myanmar at this point?
We've got, in Myanmar, there's two recent regulations that have come into place. Basically, it was back in March, I believe, and again in April, two Forex laws that came in, or regulations that came into place. We've got, I think, a better regulatory framework in progress, and we don't believe this is going to be as big an issue as a lot of people are concerned may be the case. So the government has shown that they're trying hard to improve the situation. Several of the private banks, there's 19 private banks in Myanmar, cannot handle Forex. There's only about a third of them that do. And so part of it is picking and choosing which bank you're going to use, if you're going to use a bank in any event. But as a general matter, the framework is getting better, it's improving. We don't see it as a big sort of headline issue, frankly. There's other issues in Myanmar, but that's not necessarily one.
Well, then let's move on to the biggest risk you all have encountered in working in this region. And Michael, why don't we put you on the spot on this one?
The biggest risk, and this is, I'm going to tout this in kind of a bigger, a higher level response, and then I'll get down into some specific examples. But how many people here have been through formal project management training? Okay. For those of you who have, you've probably heard protect the plan, right? Make sure you've identified what all of the risks are up front. And I think the biggest risk in the region is not understanding what the risks are, right? Do we, for an example, we were working on a solar PV project where we had an offtake agreement with the state utility company, and we thought that it was fairly enforceable. It turns out that due to a very small technical detail, the state utility tried to back out of that contract after the facility had been built and everything had been put in place. It was producing power and trying to sell it. So we got this offtake agreement, and now no money coming in, right? Thankfully, on on that one, we had political risk insurance in place. And so one of the benefits to political risk insurance is not just that, yeah, you get paid out if somebody breaches contract, but if you have political risk insurance with the right organizations, you can then get those organizations to advocate. In this case, we had OPIC political risk insurance, and so the U.S. government stepped in and started to mitigate and negotiate with the state utilities and the local government to get them to honor the offtake agreement, and that's the best outcome, right? They ended up finally paying out, on the offtake agreement and honoring it, but it took advocacy on behalf of the U.S. government to do it. So thankfully, we understood that, there may be some risks that we're not aware of, so we had something to protect the plan in place, right?
But so now, just to be clear there, so you had U.S. insurance on that, but you actually got the U.S. to help you lean on them to enforce the contract.
Yes.
So you didn't actually use the insurance,
Didn't actually have, that's one of the
but
benefits.
your entree was,
Yeah.
okay?
Yeah, so I think, people look at political risk insurance as only providing a benefit if something goes dreadfully wrong and they don't honor the contracts. And, there's been an event there such that the project is no longer viable. In my mind, the bigger benefit is the fact that you can get advocacy from these institutions and get the project. Nobody wants, it's not, you shouldn't look at it as protection to, prevent you from having a loss of 90% of your investment. You should look at it as a benefit and an advocate to help you successfully reach project completion, right? And make sure that the business runs as expected and you avoid the political risks.
And this is a terrible question, but so in that case, your backup plan was having the insurance, or did you actually know you'd be able to do that going into it?
Well, obviously, that's our perspective is you can expect that there would be advocacy there if something did happen.
Yep.
And that's the first line of mitigation. If that fails, right, then the risk insurance pays out. So you're covered there. And yeah, it costs you like 30 to 60 basis points on your upside return, but it prevents 90% of your loss if hell goes,
Great.
hell goes to hell in a handbasket.
And Sesto, do you want to go next on biggest risk you run into and how you dealt with it?
I'm going to change the question a little bit. I think in Vietnam, at least, yes, there are big things that can go wrong, but you're probably going to find that there are many small things that can go wrong, or many small things that you have to get right in order for the big project to materialize. So I just pick out a couple of small areas that are always on an agenda if you're trying to complete a transaction. One is that there's a great deal of regulatory inconsistency, and that inconsistency can occur from location to location, licensing authority to licensing authority. It can occur over time, and so you always have to tee things up or hope things get teed up before you're at a point where you're actually making a final submission, and that requires a lot of pre-discussions to make sure that everybody's on the same track, you, your client, and the licensing authority. I think the other is very much related, and that's bureaucracy. There's a lot of creative interpretation of laws and rules, and the antidote is the same. You have to be sure that everyone is aware, there are no surprises, if the licensing authorities know what they're going to get when you submit a package, and you have a little bit of an idea of how they're going to treat it once you submit. So those are the issues that I think, to try to eliminate surprise, you probably ought to deal with.
Now, in dealing with those kinds of risks, do you feel like you're able to look at those up front and guess, give a reasonable guess as to how long it will take to get through them? Or is it ongoingly surprising?
You know, when you give estimates of time, we're finding that the estimates keep getting longer and longer. One of the issues is that, and there's a very big difference. If you talk with ministers, directors of departments, you find people that are terribly sympathetic and that understand and they know what the issues are, what the problems are. But when you talk with people who are really there to issue a license to provide an approval, there is no or very little connection between the big picture and the small picture, which is to get a piece of paper moved from this desk to that desk. So I don't know if that answers your question, but that is a significant issue.
How do you help people get through that?
You have to try to identify, well, you know the office that's going to look at your project, and you have to try to talk with people in that office before you submit a document or documentation or a proposal. You try to get informal responses. You can, of course, get formal responses, but those rarely actually deal specifically with your issue. They're very often kind of a check-the-box reply so that it can be shown that you got an answer, but they're not terribly helpful. So the informal way of talking with people, not only at the basic level, but all the way up and down the line, is much more useful.
And your experience over, I mean, you've been here for 20 years. So in looking at that, your experiences, those time frames are continuing to get longer.
Yes, yes, they are, particularly for some types of licensing.
Okay. Tim, how about you?
Oh, okay. When we tax advisor talk to our client, we normally say that okay, the tax system in Vietnam is very complicated because the laws are too simple, right? So normally, if you look at the regulation, it just is strict, okay? So normally you can't find the answer in there, okay? And then of course, what are you going to do? You go and ask, and if you ask the tax department in Ho Chi Minh City, they will give you answer A. You go to, for example, Hanoi, it could be B. But if you are not happy, then you go up to the central tax authority, they may say a totally different answer. Okay? So there is a lot of uncertainty in the legal system in general and the tax system in Vietnam as well. Okay? Because the legal system is still developed. Okay? And the way that the people, implement it vary and inconsistently. Okay? And there's another thing is that the tax law change very frequently and sometimes with retroactive effect. So it's very hard to keep up with that and adapt your business with it. So let me just take you an example of the recent case that I have been working on. A very big project, property project in Vietnam, and a foreign investor just entered into a joint venture with a majority share, the local shareholder, who is a very powerful state-owned company. And the two parties put the cash into the joint venture to acquire the land from the local shareholder to develop the project. Okay? And normally what happens in the past is that if you buy the land with the infrastructure, there is some value-added tax on that sale, and the joint venture should have been able to claim a tax refund for that amount VAT. Okay, that's normally it works in the past. But just 1 month before they enter into the deal, there was a change in the tax regulation, and no one knew about that. And they just enter into the contract. sign the sales agreement, issue the invoice, pay the money to the local shareholder, get the tax invoice, go to the tax department, and they say, sorry, but under the new regulation, you couldn't get the refund for that amount of VAT. And it's something like 37 million US dollars, because the whole project is valued something like $400 million. Okay, so if they knew about that, they should have done the transaction in a different way. For example, the local partner can just contribute the land into the joint venture as capital contribution. And that is exempt from VAT. And after that, the foreign shareholder can just come in and acquire the share from the local shareholder. And it's also tax exempt from VAT, right? So they can just solve that with a very simple change to the structure that they carry out. But because the tax law changed, suddenly, and no one keep track of that, and they didn't even use tax advisor, because they say, okay, I rely on my partner who is very big and powerful corporation. So now, the matter hasn't been solved yet. But in the best case scenario, if they get back that money from the government, it may take 1 or 2 years, right? So that's something that we normally say, well, you have to be careful regardless of who your local partner is, because they may be very open, honest. They may not know everything, right? So that's something that you have to consider when you execute a deal in Vietnam.
Now, hold on. The name of this thing is risk management, right? It can't be that you're going to manage throwing away $37 million. So how do you deal with that? Because if you don't know, hopefully you'll get it back. How would you plan around that?
Well, like I mentioned earlier, if they know about the change in the regulation, actually it happened 1 month before they signed a deal with the local shareholder. So if they have a good advisor or their internal people, and then of course they should be aware of that change, and they should have structured the transaction in a different way. Like the example that I mentioned, just do it differently, and then the tax will go away. So there are a few things they can do. But now, because they already have the license from the government, they already have the contract, they have this invoice, they already transfer the money, you can't undo all of these. So now it's still pending. If we get it back, it will be like 1 or 2 years down the road.
And see, just in terms of general flow, that's why I started with currency. Because at the end of the day, we can talk about a lot of risks, but at the end of the day, most people want to put money in and they want to get money out. So that's the one thing, if there's a takeaway, it's like, please, remember to focus on that one before you get into all this other stuff, because all this other stuff can get very, very complicated. But the real question is, did you really talk to somebody who really gives you confidence you get the money out, right? Chris?
Yeah. I guess our experience has been that you want your advisors, tax, legal, other advisors that might be coming in from the LP or GP side, to really do a full drill down on all the potential risks that you might see on a particular project, and then to draft up very carefully conditions, precedent, CPs in your documentation to make sure you're covering all the issues that you can reasonably foresee and deal with these issues up front. Understanding, sure, laws change, people in particular ministries will shift up, different people will reinterpret, certainly from a legal perspective, very tightly written conditions, precedent or CPs are critical. And I'll just give you a couple examples. One issue in Vietnam has been assigning interests in big projects to third parties. And there had been interpretations that any assignments would have to be vetted pretty much in advance when a deal is initially being structured. Basically, all parties have to be sort of aware that in time, maybe in the course of 5 to 10 years, maybe later, there will be an interest for a party to exit, and the likely exit party failed to do that in Vietnam. You actually run the risk that when it comes time to try to transfer interest and exit out of the project, the government will say, well, you didn't give us proper notice. There wasn't a proper sort of foundation built for transferring interest. So basically, no. As far as we're concerned, we're not going to give permission for that transfer. So So I guess the takeaway here is in some jurisdictions, Vietnam being one of them, there's a quirky kind of issues that will come up under the legal framework where you're trying to anticipate who you might actually transfer to. If you actually think of an entity, that's even better that you might be transferring to. Of course, you don't know for sure how you're going to exit down the road, but to describe the type of entity you might exit to is very useful. So that's one CP that you put in. Make sure that that wording is acceptable to the government. Another quirky thing we experienced here in another project, we'll throw out this Latin term, ultra-virus, which basically is a term of government typically over exercising or exercising authority that they don't have. So this part of the project, and the reality is the core constituent laws and regulations that created that ministry may not actually permit them to guarantee anything as well. Or basically a ministry that's involved in the project, I mean, they want to be proactive, they want to say, sure, we'll guarantee this project. We'll guarantee we'll do whatever, we want the project to come in. But if you do the drill down, you may find that you actually cannot do that. So what we did, in one case where this happened, in your opinion, had authority to actually give a guarantee. And we were able to work it out. The ministry said, you know, it's basically doable, you can do it. And we as the Ministry of Justice will vouch for this guarantee by this ministry on this project. So we actually had a legal opinion from the Ministry of Justice in that case.
You know, let me just jump in there, because probably one of the first bills I did in this region, we sent kind of a formed legal opinion. And for those of you who kind of see these things attached and think they're a waste of time, it was a great experience because we sent out the legal opinion to the local firm. The local firm signed it and sent it back. And we had actually loaded it so that we knew they could not sign it. So we had to call them back up and said, sorry, you can't sign this because we know that this is not true. And they said, so what do you want us to do? Because that's just what we're supposed to do. And the actual useful thing, if you're not a local and you're getting a legal opinion, make sure you get them to give you the steps that you have to follow to actually enforce whatever it is you're really worried about, need to go through, and they need to make sense. And we're going to run out of time. And so instead of going for biggest surprises, we're going to miss that one, and people can come up and ask you what your biggest surprise is. But let's talk about risks that you see coming kind of down the pipeline. And I know, talking to a couple of you in advance, this could be all over the place, but that's what it should be. So from whatever your perspective is, wherever you're working, what do you see as biggest risks coming up? And if you dare to jump in and say how you think it's going to be dealt with, do that one too. Knowing that the program, you know, Ryan and gang already put in there all these things like...
Sure. I think, let me take, again, my sort of favorite market of the month and maybe market of the year, which is Myanmar. A lot of people are worried that there are risks that the government is not serious about making reforms, that despite, in fact, as we speak, Aung San Suu Kyi is in Washington receiving medals from the Congress and getting her due finally after 20 years. That despite all that goodwill, all this effort, that the government isn't genuine about its democratic reforms, and that there could be a shift back to some of the old sort of military controls, etc. So for that market, anybody interested in moving into that market, I would say, sure, vet that issue, talk to people that you think have information that would be useful. Personally, and certainly speaking on behalf of my firm, where we do have an office there, everything we've seen, everything we've heard, and we've been fortunate enough to have some very, very high-level meetings with the government in the new capital, Naypyidaw, and we believe that this is not a major risk. We believe there's enough at stake here. There's enough of a push now, pivot, which is sort of a popular term to use, to the West, that they're not going to change course. So from our standpoint, it's not a risk, and yet who can tell the future? One third-party issue here is, of course, China. China has been there for 10, 15 years now, very active. They've actually built this new capital of Naypyidaw. Amazing place. It's just an incredible expanse of cement. It's just incredible. And what will they do? China is beginning to flex some of their muscle in other parts of Southeast Asia. Myanmar might be among the countries where they'll kind of inject some of their vitality. It seems like they're okay now with this pivot to the West, but again, a lot of people asking questions. So anyway, that's maybe it for Myanmar. Others, maybe sure that have comments on other parts of the region.
So this is trust me, knowing that the most famous person you know was under house arrest for 20 years.
Yeah, it doesn't sound very intuitively sound, but at the same time, you know, it's a little bit of a Bush-Putin thing. And of course, that one didn't work out quite as way. But what was Bush's comment? I've looked into the eyes, I've looked at the soul of Vladimir Putin, and I trust this man. Well, you know, okay, things maybe didn't quite work out every which way that Bush had expected with Putin. But at the same time, you know, there's still peace, and you know, things haven't really returned to the Cold War era, at least not yet. So I think in that sense, you know, we've looked in the eyes of a lot of these leaders, and I think generally it looks pretty positive. So that's our take.
Okay, Michael, from your perspective as a project developer.
Well, I think, you know, as always with projects in emerging markets, the political and regulatory environment plays a huge role in several of the countries that we're doing projects in right now. Changes to that political environment can certainly have an impact. I want to kind of transition that though. We work very closely with OPIC and Exim Bank and other U.S. government agencies. And so the U.S. government not getting its act together could have a huge impact on our business, even though it's back home, right? And that'll obviously, if we hit this fiscal cliff and, you know, they make huge government cuts, it affects the programs that we're involved in, that cuts off one of our key sources of funding, you know, and it'll also have a huge economic impact. I know it seems like we're a little bit more, we're a little bit safer over here in Asia. At this point, the economies have decoupled a little bit, but I mean, at the same time, if the U.S. economy falls off the cliff, it's going to have a major impact to the rest of the world, I think. So that's the single biggest risk, I think, from our perspective in our firm, is what's going to happen with the U.S. government over the next 5 months.
Okay. System?
40 years from the time it opened up, after an initial period, very self-confident, and it believed that foreigners would come and invest here, and indeed they have. As that's happened, though, it's become more and more difficult to invest, in the sense that some incentives have been removed to the point where there are very few incentives left to invest. The region has been changing fairly dramatically, and Vietnam, I fear, has not been as focused on what's happening to the potential competitive environment around the country. And so, and maybe an overlay of that is a kind of consensus decision-making rather than a person who can make sure that the country is moving in a particular direction. It tends to be a consensus type of leadership. So my concern, at least as far as Vietnam is concerned, that it won't respond to the changing environment around it, and will continue to believe that we are Vietnam and people will come here to invest.
And let me thank the conference organizers for all the people they've invited and for all those who are participating. But it seems to me like one of the biggest risks we face is we don't have Chinese speakers on like any of these panels. And at some point, that seems to be something we all should be benefiting a little bit more from, especially here. But anyway, thank you all. Our time's over. And thanks to the organizers and for all of you.
Thank you very much. Up next, we have Country Focus on Myanmar, or as we learned this morning, Myanmar/Burma.
My name is Ken Stevens. I am from Leopard Capital, where I'm a managing partner. I'll tell you a bit more about us after my colleagues go through their businesses and their backgrounds. But I just wanted to say I'm a Thunderbird graduate, class of 1990, so I'm very delighted to be at this event for the third time. Glad to see T-birds are living in exotic, wonderful countries like this and living the Thunderbird dream. So I'd like to turn it over to my two colleagues who are quite knowledgeable about Myanmar and quite a few other countries in the region. We have to my left Marvin Yeo, the founder and managing partner of FIDP, the Frontier Investment Development Partners, and Jack Kelly, the managing partner of Myanmar Blue Ocean Services. So we'll start off with a bit of background on them.
Thanks, Ken. I'm Marvin Yeo. I'm originally from Singapore, though I lived for most of my life away from Singapore. I originally started my career as an engineer, then moved on into investment banking, where in Singapore, Hong Kong, and London, where I was in fixed income, and then I moved on to dealing structuring and derivative structuring. And then when I was sent back to Asia, I took a detour and got into the restaurant and bar business. So I was an F&B entrepreneur in Singapore for about a year and a half. Then I joined the Asian Development Bank in Manila to run the syndication.